I just came back from the gym and I grabbed my coffee and I realized it's from Coffee Guru. That reminded me of a topic that I wanted to talk about for a while actually here. And so just quick and dirty. Look, how do I start? Have you ever heard of the famous technical analysis department of Goldman Sachs? Have you? I didn't. 20 years in the game, I have not heard of a technical analysis department, neither of Goldman Sachs, nor of Citibank, or any other institutional company. Before I was a professional, I also thought indicators are the magic sauce. Trend lines, support and resistances, that is the secret. But, again, ask yourself, everybody knows about these things. And if that would work, if that would be the secret ingredient, wouldn't everyone also be successful with it? Because in reality, they're not. Even I myself at the beginning, little did I actually know that I was deceiving myself. And I didn't even know about it. Guys, actually, I would have killed for someone to give that kind of real talk when I tried to learn things. Because nobody was out there. And what I want to show you in this video is why your trend lines, your uncle's strategies don't work. And they're really not helping to be profitable in a consistent way at all, actually. If, again, the art of drawing trend lines, using some indicators that everybody else is using, if that was the secret to success, then again, why are 99% of especially retail traders absolutely rock bottom broke? And why are the top 1% not really looking at these things at all? And if the professionals in general rely a lot less on charts, then what else do they rely on? Well, what gives them the ability to make more money than the rest and actually arrogantly call everybody else dump money? How? So look, in the professional world, the technical analysis phase is it's part of everyone's journey, right? Even when you start in the professional space, you try to you figure out the timing and things of that through technical analysis, and then you start to think no, timing and technical analysis doesn't really work. The entry of my trade is not just based on technical analysis neither. And that's actually shocking when you go through that. In fact, when you start to work in an institutional space, they let you go through these things because you need to figure out by your own that stuff is baloney, as they say. And that's why, so that you don't need somebody else to convince you of it. That's the whole thing, by the way, about a trading skill set or ability is that you need to, you cannot be convinced by someone else. You have to have your own opinion, your own ability to discern, your own strength of decision making, right? And if you just follow other people's opinions, whether it's on Twitter or even your colleagues or friends or whatever, you're not going to get there. And that's the thing with technical analysis. It's incomplete. It's literally only one aspect of a multidimensional approach that is necessary. I've talked about it so many times. So when you're just trading based on technical analysis, okay, to be very frank here, you can also see whatever the hell you want to see. You can see a dinosaur. You see, this meme with the dinosaur chart. A scalper might see, I don't know, an airplane. A swing trader might see a tsunami. But, and you can literally plaster your charts with 500 lines and boxes and whatever. And all it's going to do is it's just going to continue to feed your confirmation bias and is not going to help you make consistent, profitable choices and decisions. Absolutely not. So the success in trading is not defined by one big win. I keep saying that. It's defined that you generally win more than you lose consistently. That's how it works. Only then you can call yourself a profitable trader. Because even if you win big once, you are very likely to lose it again if you don't have a method, an underlying method that has a consistent winning aspect to it. So what you need, I said this many times, is a statistical edge, right? The statistics need to be on your side. And let me give you another example about technical analysis. Have you ever heard about the red car theory? I love that one because it's so simple. So once you notice something specific, like a red car, then suddenly you start to see it everywhere. If you pay attention to a red car and then you start to see it everywhere on the street. And the funny part is that these red cars, they've been there all the time, but you've never seen them before. You never paid attention to them. They were never in your framework of perception. I think The first time I really realized that to an enormous degree is that when my wife was pregnant, and suddenly I would see all these pregnant women everywhere in the supermarket, on the train, in the streets. Like, I've never seen pregnant women before ever in my life, but they've always been there. And as soon as I had a pregnant woman in my life, they were suddenly freaking everywhere. You see what I'm trying to say is that your perception is flawed. You will see what you are actually looking for. That's so important that you understand that. Because when you know that, it's you work with it. That's also what I keep saying. My mantra is that don't fight reality. Understand reality and start to work with reality. Because when you work with reality, you have an actual chance of winning. If you work trying to argue with reality, all it's going to prove you is wrong again and again and again. And every other lesson you will take is going to be more painful. So don't do it. Again, and or there's this other example here. There's this rotating girl. So which direction is it rotating? Clockwise or counterclockwise? Just have a look. And it doesn't matter what you're saying. Whatever you say is right. So this is why if you trade only of what you believe to see, it's suicide. And that's what technical analysis all by itself is. Everyone sees what they want to see. And that's why they develop all these religious approaches around certain technical analysis aspects. Because they literally believe it's true. And they don't understand how their own mind and perception works. And that's silly. That's just silly. Why would you not want to understand how your mind actually works and then work with it instead of trying to trick yourself and trying to convince yourself and others of that? It's just nonsense. That's one thing, Once you understand that, you understand like, okay, I need more points of reference to confirm my perception. And this is why I created the 7 building blocks. The 7 building blocks, as you combine 7 data-based objective statistical things, they create a statistical edge, a statistical advantage, a reality in data and numbers. And that is what giving you then an edge, an advantage, a possibility of winning. So in my case, I use market phase, I use price location, I use entry pattern, I use risk management, I use an additional confirmation. I look at the time of trading and, of course, trade management. And when you have a trading strategy that has all of these aspects, taken care of, then you just let the data play out. So and if one aspect is missing, then you will have a problem. It's like, I bring this example also many times. If you try to build a building and one of the aspects that is required for the building to be robust is not in place, the building will collapse. And the same is actually with the 7 building blocks. If you try to trade in a wrong market phase, then you will be just, losing. So if you're trying to trade a range in a trending market, then the market will break out and it will just roll all over you. If you try to trade a trend strategy in a range, the market's it's just going to flip-flop back and forth. Choppy, as people say. So, that's just one simple example. Same as with risk management. If you don't have a proper risk management in place, look, you don't even need to have a high hit rate. Hit rate is such a misunderstood number. What you need to have in place is a proper risk management consistently over your trade. So if you trade, for example, a risk reward of 2-to-1 every single time, and you hit the 2s also enough times, then your strategy will have a positive result in total. But if your risk management is all over the place and different every time, then it will not. So that's just another example. Trade management is another thing. So, simple example, just because you have 50% win rate really doesn't mean that every other trade's going to be a winner. That's another big misconception. There is a distribution to a hit rate, and it evens out over more trades, the more and more trades that you place. But you cannot know how many. That's exactly the point that so many miss. 50% hit rate does not mean I win, I lose, I win, I lose. It also doesn't mean I win, I lose, I lose. Also, there's another fallacy. That's again from gambling. You can learn a lot, by the way, by studying gambling statistics. Just because, let's just say, let's use roulette. Just because you had black statistically, for the next one to be red because we had so many blacks before, there's no reason for that. There's absolutely no reason for that. So if you think, oh, the market went up, 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 it will go down now. I will just add a trade and it will go down. No, that's not how it works. This is actually how you trade martingale and how you kill yourself and get a margin call. And I'm very sure that a lot of you guys watching this video have exactly been in that place. You thought like, oh, it went so far, it needs to come back now. And you're sitting in your losses because you didn't do proper risk management and you fell victim to the fallacy of believing that the odds will change into the other side because the one side happened so many times. That's not how it works. Absolutely not. I can explain to you actually that math in another video. If you want me to do that, you can use the comments and say like, hey, let's do a video about losing or trade statistics in general. So what do? We create a strategy with the 7 building blocks. A strategy that works for you is also important. It needs to be a strategy that you are able to comprehend, that you are able to really internalize so well that it becomes second nature of you. And then you can execute it. And then as you execute it, you can learn where are you maybe not executing it as perfectly as you wanted to. But that's on the execution part. In the development phase, you also need to backtest a lot what you do. So you need to look at your rule set, the 7 building blocks, bring the statistics on your side, understand the rules that you want to do, and then look in a large enough sample size, meaning how many trades. It depends also on the time frame and what kind of asset and stuff like that in order to decide how many trades, what large of a sample size you need to backtest. But then you can also understand other statistics like what is a typical losing streak, what is an average winner, what is an average loser, what is an average time of a trade to go in profit to end in profit, what is an average time if the trade does not go in my direction, it ends up with a higher probability in a loss because that would influence my trade management. For example, if I know that typically trades that don't go in at least some degree of profit within 2 hours, 3 hours, whatever the statistics is, that they have a higher probability of ending up as losers in total, then I just cut them off right then and there. And instead of just trying to sit and hope, use the data. That's your edge, statistical edge. And that's why we do it. And then after the back testing, you also do forward testing. Forward testing is just a fancy word for trading it. So trade it and find out as you trade it, where are your challenges in putting it into action? Are you going off board somewhere? Why, when, and how? Journal, review. That's the whole process of learning how to trade. And, and the real secret, listen up. If there's an alignment between your back tests, your live trading, and you have a statistical edge strategy in the first place, then you're going to be profitable. I'm just, having fun, After all, I just had a guru coffee. So, guys, the conclusion is trading is a multidimensional game. Technicals are one of multiple dimensions. So don't rely on technicals only, on what you see on the chart, especially if you know that what you see is heavily biased by your own perception. Work with 7 building blocks. Bring the statistics on your side. Back test, forward test. Bring alignment into all of that. And then you're going to make money. If you have any questions about that very process, because that is my approach. This is what I teach to people, and this is how I've made plenty of people actually rethink their trading and become profitable. Really traders, actually. And so if you have questions about any of that, drop them in the comments. I'm very happy, to give you feedback, responses, and I'm interested also in what you are struggling with, especially when it comes to that. So I do have a mentorship. And again, I don't take many people in. I don't look to make this like this major mainstream sort of thing and trying to sell you a hope or a dream or any of that stuff. I want to teach people that want to learn real trading. I want to teach them how real trading works. One-on-one, personally with me. And trade like a professional, become profitable, statistical edge. And by the way, that doesn't mean it needs to be overly complicated or even difficult or time consuming. None of these things are true. You can build a strategy. Actually, my track record strategy, and by the way, I'm up over 7% in this month in August, over 7%. And it doesn't take more than a couple minutes a day and some planning of the trades on a weekend. That's everything. Okay, and that is a consistent track record with over 100% profit over now, I think like 16, 17 months now. Let the data speak. Stop, words are cheap. Yeah, that's it, guys. So I really hope that you would choose your guru wisely. See you on the next video.